Good morning and welcome to the B.F. Anderson Technical Report for May the 9th. We all know about the news this week. It's been a difficult week this week. A lot of uncertainty around the trade talks going on with China right now. Now, the NASDAQ continues to stay in an uptrend. However, we have broken below the 25-day moving average. We did the same thing here back in early March. Let's just see how this goes. If we break below the 50-day, I would become a little bit more concerned about the market. Volume has been somewhat average, not a crazy amount of volume. We'll get into that in a minute here. Now, on the weekly NASDAQ, we continue to stay above the 35-week moving average, which is very bullish. We don't want to see anything like this here, and hopefully we continue to hold above the 35-week. So far, so good. Now, the big concern here this week has been 2 days ago we had net decliners that were the most decliners for the year. However, the advanced decline line continues to stay in an uptrend, but we are seeing some selling. Now, on the high-low index, we're still kind of stuck in a range. We're not seeing a lot of new lows. Yesterday, we actually saw 33 new lows, but we are staying below the 40 new lows per day. This is somewhat positive. However, also the long-term indicators look positive. The 10-month and the 20-month moving average continue to stay in an uptrend. Long-term, everything looks fine. Now, another snapshot of a long-term indicator is the 200-week moving average using a weekly S&P 500. You got to take this market and use trend following because the trend is your friend. And basically, since 2011, we broke above the 200-week, and we have stayed above the 200-week for an extended period of time. And every time we get one of these corrections, the 200-week tends to hold. So basically, the trend continues to stay positive on a long-term basis. Now, the put-call ratio, which is fear-greed, we have moved from, extreme fear back in December. Now we've gotten into greed. Now we're popping back into more of a neutral area. This basically means that the institutions have become fearful, mainly because of these trade talks. I would think that this is fairly news-driven. And we have moved back into a neutral area on sentiment. This is a positive. In fact, it wouldn't be a bad thing if we moved back into fear. But right now, we're neutral. Now, the S&P, the Russell 2000 Small Cap Index has been diverging with the rest of the market. Now, think of this from a common sense point of view. If the small caps are not breaking out to new highs, it means that confidence is really not as positive as it could be. So watching the small caps is very important. And as the NASDAQ and the S&P have rallied to new highs, the small caps have not. And basically they've gone nowhere since September of last year. So we're basically in a consolidation here. Now, I got somewhat excited last Friday. We broke out above 1,600 for the first time in a while. Then we pulled right back into the base again. So the small caps need to get into an uptrend to really confirm this bull market. Now, another way to confirm the bull market is the Value Line Geometric Index, which is a equally weighted index, very important index. It has pretty much been stuck in a trading range for a very long period of time, approximately 16, you could even say 20 years. However, around 2016, we broke out of this trading range for the first time, rallied to new highs. Then we pulled back last year, made a higher low, and now we're rallying again. Now, I went ahead and drew some additional lines here. As long as we can stay above 520 on the value line, ideally, it would be nice to see this index move this direction. Let's just keep an eye on it. Now, on we pointed out last week the importance of breadth thrusts. This is where the advanced decline line does very positive things, where advancers are outnumbering decliners by a 2-to-1 basis over a 10-day period. This is somewhat rare. We pointed out these in the past. Now, one thing I did want to point out this week, usually you get a breadth thrust, which is the bottom of the market, and you're starting a new bull cycle. but you are going to enter a consolidation phase. Here is 2009 breakout breadth thrust consolidation phase, 2011 breadth thrust consolidation, 2016 breadth thrust consolidation. Now we got a breadth thrust in January of this year. However, we really have not seen any consolidation like the past. I would not be surprised if that's not what we're seeing today. Now, one thing to talk about when we look at past years and try to compare to where we are today, it's nothing more than just trying to understand investor behavior, human behavior. Now, what was unique about 1990-91, which I think is the comparisons are quite unique. We got a double pullback in the 1990 period that led to a rally in 1991. So in other words, in March of 90, we pulled back 10.21%, then we rallied to a new high, pulled back again the second time by 19.84% in October of 1990. Then we rallied to a new high. So the question then becomes, because everyone says, gee, we've hit this new high, this has got to be over, we're going into a bear market, whatever. What happened next was quite amazing. We launched a major bull market that lasted 9 years. So, in other words, 1990, you kind of look at that double drop and you say, is that a shakeout? Because sometimes the market shakes everybody out and then it goes. Now, if we look at where we are today, this is last year. We hit a high in 2018. Then we pulled back 10.16%. I apologize. That is 318, not 319. Made an error there. However, back in 1990, it was 10.21%, pretty almost identical. Then we rallied again to a new high, just like we did back in 1990, and then we dropped and had the biggest drop in December. Look at that drop in December, quite a drop. We dropped 19.78% last year, which is December of 18. And then in 1990, we dropped 19.84, almost identical. And so we made that low, then we rallied to a new high. So the question now is this going to repeat and we go into a 9-year bull market? Well, we'll just have to see. Now, the top 5. Here is a company called Enphase. They are involved in the solar area. They make micro inverters that can convert AC to DC and so forth. But the stock did break out on some announcements, and you can see doing quite well. This is Lattice Semiconductor. These semiconductors have had a tough week this week. However, Lattice continues to stay in an uptrend. This is Sinclair Broadcasting. Stock broke out on a $10 billion deal with Disney that is quite favorable. Then we have Shopify, which is e-commerce, continuing to look good. This is the breakout on earnings. We own this stock. We think it's going to do well. This is Zscaler, which is involved in cybersecurity. We think cybersecurity continues to be a very important area, and we're involved with a company called Okta. We have owned Zscaler in the past. However, Okta has the identification management technology, which we're quite interested in. So it's been a tough week. We got 2 more days to go. Call me if you have any questions. Thank you very much.